So in this class, just like I already told you earlier, we are going to explore chart patterns. Okay, we are going to explore different candlestick patterns, or what we popularly call chart patterns. Okay, chart patterns are these patterns that are formed in the market. Okay, they are patterns that are formed in the market, and they give you idea of how the direction of the market will be. Okay, they give you an idea of how the direction of the market will be. We have countless chart patterns out there. Okay, I'm really happy that you are exploring this space on your own, studying and trying to understand what is happening. So you can, as you are exploring the candlesticks patterns or types, you can also start studying about the chart patterns. Okay, check the continuation patterns and the reversal patterns. And then if there is any question, please take a screenshot of whatever you are doing and forward to me. Okay, so I can explain better for you, please. Okay, so for example, let's say we have a particular pattern like this. Okay, let me use a box to represent for today. Okay, so let's say the market is moving within this particular range like this. Now, this is what we call a flat market. This is a flat or a ranging market. Flat. Okay, this is a flat market or ranging. Range. Okay, this is what we call a flat or ranging market. So the market is moving within a specific area. There is no clear direction. When there is no clear direction, it is a ranging market. Okay, this is a ranging market. So buyers are entering from here, sellers are entering from here. Buyers enter, sellers enter, buyers enter, sellers are entering. So in this scenario, you are going to concentrate on the entry points only. So this will be your entry points, entry points, entry point. If you are going to buy, if you are going to sell above, this will be your entry point, entry. So I believe by now you should understand what I mean by all this. I will not be going over all of those stuff again. You already know that the upper line represents the resistance, while the lower line represents the support. Okay, so I believe by now you should understand what I'm doing here. Okay, so the market can range in either ways. It can range in ascending or in descending order. Okay, the market can range upward or downward, just like I showed you in our previous class. Okay, there is also a there is also what we call channels. Okay, so if the market is moving downwards like this, just like you see here, and then it is moving like this is called a channel. Okay, all these are patterns in the market. This is a channel. Okay, and then another thing you need to take note is, in a ranging market, if the market is moving like this within this particular area, if there is a breakout, the buyers will take the market upward. If there is a that is if there is a breakout above the resistance. What if the breakout is coming from the support like this? If there is a breakout of this at this area, you are expecting the sellers to push the market downward. So if you see a situation like this, if the market breaks out upward, the buyers will push it higher. If the market breaks out downward, the sellers will take it lower. Okay, and then in some situation, you will see scenarios like this. Okay, you see scenarios like this, and then um, like this, like this, like this, like this. If there's a breakout like this, the market may touch this level and then before it goes down finally. If the if there's an upper breakout, it may come after, it may retest this level and then shoot up finally. Okay, okay. So I'm glad you, what I'm teaching you, please, what I'm teaching you, you are not going to understand this overnight. This concept, you are not going, you need to replay this video all over and all over again. That's why we are recording it on cloud. Okay, that's why I'm recording this class, so that you can review it, so that you can revisit them. Okay, so that you can revisit it and all over again. I'm glad you said when you watched the first time in the class and then you went back again and check it, then you now understood some concept what I was trying to say. Okay, because I opened it on live market and also explained this manually, just the way I'm doing now. Okay, so please do your best to not just do this thing once, because this is going to take you over time. What I'm teaching you now, it's like ABCD to me, but it took me a whole lot of time to also comprehend these things, dedication and much studies. Okay, I dedicated my time to this. I studied, I researched. Okay, I studied this topic on my own. Each of these topics, you are going to try to do your best to study them properly. Support resistance, breakouts, you are going to study them. Okay, I already explained those concepts, so I'm just emphasizing on them, please. Trying to let you know that you are not going to understand it just by this class alone. You are going to understand it over time. The more you study, the more you understand. The more you study, the more you understand. Okay, so please don't relent. Don't just go and sleep over it and think maybe this is one in a lifetime class. No, the market continues to grow, it continues to evolve, so you also will evolve with it. Some of the patterns I'm going to show you today may not express themselves perfectly the way we are going to draw them. They will show themselves in different formats. So if you are not experienced now, if you don't study, you will now be wondering like, my mentor or my teacher said that this is the channel, this is the head and shoulder pattern, this is the inverted head and shoulder pattern, but this one is looking different. No, you are going to see these things in a different format. Okay, so let's start with the very first pattern, the head and shoulder pattern. So head and shoulder pattern is a pattern in the market that looks like this. Okay, so let me draw again. Hope you are seeing this thing very well. This is the left shoulder, the head. This is the right shoulder. Perfect. Now, this is a perfect head and shoulder pattern in the market. This is a perfect head and shoulder pattern. This is the head. Sometimes we call these patterns according to the shape. It's just like a human being. You have head and shoulder. So this is the left shoulder. I will represent it by LS, left shoulder, and this is the right shoulder. I will represent it by RS. So this is a head and shoulder pattern. In this particular pattern, sellers were going up like this, and then buyers entered and then shoot up like this. Then sellers entered and then up, and then sellers entered again. Now this particular area here is what we call the neckline. This is the neckline, neck. Okay, neckline. So this is the neckline. Now a breakout of this neckline like this will push the market lower. So if you are in the market and you already spot a head and shoulder pattern like this, what you need to do is to wait for a breakout, okay, from the neckline. Now this is a perfect head and shoulder pattern. Now what if the market is moving in a channel? Let's say the market is going upward and you now see something like this. You will now be wondering like, my mentor said head and shoulder pattern. You understand? What is this one? I just decided to extend it because let's say the market is going in this channel like this. Okay. Now where is our head? This is our head, H. This is the left shoulder. This is the right shoulder, the first one here. Okay. Now if the market breaks out of this channel like this, this is the breakout from this area, you can expect the market to go down, like sellers will push the market lower. So you can see now, you can see the different ways in which this head and shoulder appeared. So it can appear in a flat market or in a trendy market. It can also appear in a channel, either uptrend or downtrend channel. Now this one is for uptrend. Let's see for downtrend situation. Okay, for downtrend, now you see something like this, like this, like this, like this. Okay, so this is our neckline, remember, and the market is moving within this channel like this. Okay, where is our head? This is our head, H. I will represent the head as H. This is our left shoulder, LS, right shoulder, RS, and here is our neckline. So a breakout of this neckline like this will push the market to the downside. Okay, so this is head and shoulder pattern. All these chart patterns, you are going to see them in the market. So you can see now I've shown you 3 different ways in which the head and shoulder pattern can appear in a chart. Okay, so basically these are the 3 ways in which you can experience or you can see a head and shoulder pattern basically for a start. All right, so let's move on to see other chart patterns. Okay, so you can see this is a channel. I took this screenshot from a live market, I think this morning or so. This is a screenshot from a live market. So you can see that this is a channel. So if you look very well, this is the resistance and here is the support. The market is moving within this particular area. The market is moving like this, like this, like this, like this. So these are our entry points, entry point, entry point, entry point, and the next entry point is here. Okay, so under normal circumstance, this will be our next entry point. So if you open a position for like 5 minutes, it should go up to test this particular level here. Okay, the market should go up like this. Why? Because this is a channel. You can see the market is moving within the range. So this is what we call a channel. So some traders may call it a descending channel because it is going down. Okay, because it is going downwards. If it's going upward, they call it ascending channel. But just have it in mind that this is a channel. Either way it is happening, just know that it is a channel. And if the market is moving in this format, just see, you can see this, you can see that is why I took this screenshot. It is clear, there's no doubt here. You can see sellers entered, right? These are your entry points. All these areas I'm pointing, you can see. Okay, now for you to spot a channel, you must, just like the normal level of support and resistance, the up line here is our resistance. lower line is our support, and the resistance is where sellers are entering from. The support is where buyers are expected to enter from. As you can see, sellers enter from this level, sellers entered, and then finally sellers entered again. Now in this situation, you may not know that this is a channel. Okay, you may not know that this is a channel until you have spot two levels like this, above and then two levels below. Then you can now draw the area. So your next entry point, your first entry point, if you want to go with sellers, will be here, this particular level here. Okay, that's your next entry point. Now, but you don't just enter like that. You enter when you see a reversal candlestick pattern. Those candlestick patterns that I showed you. Okay. Now, if you look at it carefully, there is a engulfing pattern here. So this is what I'm telling you now about those candlestick patterns initially. So you can see that this candle, there's an engulfing pattern. We have a green candle first of all, because it is a breakout of the trend line, a fake breakout, and then finally we saw this bearish engulfing candle, meaning the sellers completely or totally dominate the buyers, indicating that the market will go down. And if you look at the past history of this channel, you can see that this is an engulfing candle also. You can see that here is an engulfing candle, the market reversed. For the first one also, you can see that this is also an engulfing candle. You can see that the market reversed. So you can look at this previous market history, this previous two histories, to determine the future here. Okay, and you are seeing the same pattern repeat itself. You just go, you enter with sellers, that is all, as simple as that. Okay, so this is what I'm talking about. So let's say if at this area what we were seeing was a hammer candlestick. Let's say here is a hammer candlestick and then the market reverse. You saw a hammer candlestick, market reverse. And then here also you look for a reversal candlestick also. Either a hammer candlestick, an inverted hammer candlestick, or a hanging man. But in this upper trend line, mostly what the type of candlestick pattern you see there, maybe bullish, engulfing candlesticks, inverted hammer. You know, hammer will always appear in a downtrend, but in an uptrend you will see what we call an inverted hammer. This is an inverted hammer. Okay, so you will see what we call an inverted hammer, the hammer that is turned upside down. Okay, so if you see an inverted hammer, or what we call a hanging man, the hammer that is formed in an uptrend, this is called a hanging man. Okay, so that is a hanging man. So you can either spot an inverted hammer at those areas or a hanging man above the resistance level. This resistance is here. You can use them to enter the market. So but for the support, you can spot hammer candlesticks like this. So let's say this is a hammer candlestick. You see that the market reversed. Are you getting it? So if you see another hammer candlestick at this area, you can expect a reversal also. So this is how the market will move, like that. Okay, so if you are entering for a position, you can put your stop loss now somewhere around here. Your stop loss will be somewhere around here, so that you give enough room for your trade to breathe. You give enough room for the markets to breathe before you go with, before your trade can go in your direction, because there may be pullbacks. There may be pullbacks, just the way it happened in this scenario. You can see there is a candle with a small candle with upper wick. So if it were to be a doji candlestick, this would be a dragonfly doji. This would have been a dragonfly doji, but it's still red in color, so it is still a bearish candle. Okay, it's not a perfect doji. All right, let's explore other charts patterns, please. This pattern is what we call a double top pattern. Double top. So when we talk about double tops, we are trying to show you that in this scenario you can see our level of resistance above here. That is the level of resistance. Then the buyers were going up, they entered the market, hit that resistance, entered again, and then form a level here. And then from that resistance support, the buyers entered again, and then eventually they drop. So now this is a double top. This is the first top, this is the second top. This is what we call a double top. Okay, this is what we call a double top pattern. Let me draw again. So the market goes up like this, like this, like this, like this. So this is a double top pattern. This is the first touch, this is the second touch. Now here is also called the neckline, just like the way we saw in head and shoulder pattern. This angle here is called the neckline. So a breakout of this neckline, just the way it's broke here, we move the market downwards, if you see. Okay, you can see that in this scenario the market already broke. So you can see that in this double top, you can see the breakout candlestick. This is the candlestick, this bearish candle that broke. You can see a very strong bearish candle broke the level. Okay, and then after breaking out, you can, if you see clearly, the market goes down like this. So you can see this is how the chart patterns work. You have spotted a double top pattern. So this is trying to tell you that the sellers are very, very strong in this scenario, because the buyers pushed the market like this, the sellers entered, the buyers tried again, the sellers now push, forming this particular pattern you are seeing here, this double top pattern. So once there is a breakout of this neckline here, if there is a breakout like this of this neckline, the market will go down. Okay, so sometimes it doesn't happen in all scenarios. Actually, sometimes the market may not go down like completely. It will go like this, retest the level, use it as resistance. You know, I told you that if a resistance gets broken, it becomes support. If a support gets broken, it becomes resistance. So initially this is a support. After breakout of that candlestick, it tests it, use it as resistance, finally it drops. So this is another way in which the market can operate. Okay, this is another way in which the market can operate. But in this scenario, the breakout was direct. You can see that the breakout was direct. Okay, but sometimes the market will break the level, retest it, and then drop again. Okay, so these are the various ways. So if you are another thing you need to look at for is anywhere you see, let me just clear this doubt here. Anywhere you see buyers entered or sellers entered, that level is a support level. You can see this is just a green candle, one green candle. This level, that area is called a support area. This is a one single red candle, it is a resistance. One single red candle, it is called a resistance area. So these candles will enter as a result of a previous level. If you see a reversal, even if it is just one candlestick, go back in history, you will realize that there is a level there. So you can see that these sellers enter there, this market goes up, even though it is one sellers again, you can see before eventually the buyers broke the level. Okay, so after seeing this breakout candlestick, you will see that the market goes up, goes up direct like this, forming this particular double top. So in this double top scenario, there is a situation where we may have a triple top pattern. That is why stop losses are very, very important. This is the first top, goes down, second top, it goes down, it may form a third one before it goes down again. So this scenario is called a triple top. A triple top like this. You can see 3 touches. Okay, you can see 3 touches there. Okay, you can see the first touch, you can see the second touch, you can see the third touch. So this is called a triple top pattern. Always have it in mind that this area is the neckline. Okay, so what we are looking for is a breakout of this neckline, because above is the strongest resistance. Okay, so if you see a breakout like this, then we can open a position for sell, to sell the currency pair. We can open a position to sell the currency pair. Okay, all right. All right, so it has not really been easy for me. Like, after my daily activities, try to see how I can put this class in order. And I appreciate the fact that you appreciate what I'm doing. Honestly, it has not really been easy, but we are all craving for success. Okay, we all crave for success. That is the goal. In this life, there's always a sacrifice to pay for you to succeed at anything you are doing. Look at how I'm teaching you flawlessly. Flawlessly. Why? Because this is something that I've been a part of me. My very first class, I was like, I was I was still back in university days. I I I I started this having this idea, you know, but I had nobody to pull me through. In fact, my first forex class was a total blunder. I thought I was having, in this life, once you are ignorant of something, if you don't know about anything, any information they give to you, you just assume it to be true. Why? Because you are ignorant. You don't know. So I think my first forex class was far, far back. I was in my final year in the university. So when I attended this forex seminar, okay, I paid some huge amount actually. I will not disclose it because I'm going for knowledge. So I have to pay because I understand that nothing good comes easy. There's no free meal anywhere. There's no free lunch anywhere, and there is no free knowledge anywhere. So I likened it to my university days. I was imagining myself studying a particular course in the university. I pay school fees. So, and they are imparting me that knowledge. So what if I'm not, why won't I pay for getting financial knowledge? Knowledge that can help me tomorrow to be independent once I'm fully grounded in it. So even though the class was a total blunder, but it's sometimes once you are trying to navigate a space on your own, it's like that because there was nobody. But after then, I kept making research. I didn't have the money to actually go for other programs to extend my search. So I had to wait after graduating from the university, completing my national youth service. That was when I said, okay, let me go back to an old skill that I had passion for. Because I actually was exploring the internet space. I was thinking of something that I can do for myself, something I will be able to be making money on my own without anybody having to pay me. Because I've worked for people. So sometimes most of these private firms, if the time once it gets to after working for them, if they want to pay you, they will not do as if they are dashing you the money. It's like they are gifting you the money you worked so hard for. Sometimes they delay your payments, they pay you when they feel like. So I got so frustrated, and I made up my mind to be independent on my own. I'm just sharing this testimony just to motivate you guys, just to motivate you, please. So I was like, okay, why would I be waiting for somebody? I just realized that I have a lot of potentials. I can make money on my own. Why should I be waiting for somebody to come and pay me money? I know it's going to come at a cost. So this is the cost a lot of people are running away from. Because I believe that if I decide to put my brain to work, I will get the result other people are also getting. because I will not just I cannot be redundant, just being dormant like that without using my brain to do something. So that was my trigger point, because when I started, I was working. They would delay our salary. I was teaching. I was a teacher. So I delayed the salary until they feel like. From there, I moved to another school. I was teaching in that school, and in fact, in Nigeria, yeah, most of our country, yeah, most school owners, they are the ones that have that mentality, and it's a very bad one. Seriously, they overwork these teachers, and when it gets to the time when they are supposed to pay them, they will now they will be giving you the money as if you didn't work for it, like they are gifting you the money. So while exploring I now realize that we are in the age of ICT, information communication technology. So computer has made the world a global village. I explored a lot of things. Affiliate marketing. I explored a lot of things. I tried web designing. I did a lot of stuff. So I now get to realize that there is this thing that if I choose to get a skill that will make me to do something for somebody, that will make me to go and start looking for clients, I'm still within that rat race. So affiliate marketing gave a very good opportunity. Okay, affiliate marketing was a very good opportunity for me. I explored a lot of affiliate marketing platforms, but I realized that it is to me it was not sustainable. You understand? So I started hearing about the forex class, as far back then. Even though these guys were not really that good, they were just using this. They were just giving people uh, peripheral trainings, and collecting money from us. So I now realize that this skill is a skill that I can sit down on my own and do something for myself. If I make the money, it is my money. If I don't make the money, fine, there's no problem. But if I make the money, I'll be able to withdraw that money immediately and use it to do something reasonable for myself. So I explored. I put my brain to work. I was getting fake trainings left and right, but I kept moving. Many of the things I learned on my own. A lot of things over the years. If you check my YouTube channel very well, I always say it. You will see the first video I uploaded was 4 years ago. And I started uploading videos on YouTube. That was not when I started learning this skill. Okay. So we are in 2025. If I screenshot my page on, let's say, the IQ Broker, for example, now, you will see that my first account was created as far back as 2018. So start calculating from 2018 downwards. 2018, 19, 20, then we are in 2025. So you can see that I have 7 years experience. So you can see that it's not something that I mastered overnight. I'm teaching it flawlessly because you can see the years now. 7 years of consistency. So a lot of people want to make money overnight. You went to university, you studied a particular course for 4 years, 5 years, went for youth service. And then here is a financial skill. You just want to come and learn the skill overnight and start earning money. It's not something you don't kill yourself over it, but you are going to master it over time. You're going to perfect it. You are going to gain knowledge. You are going to gain insights. You are going to gain understanding over time. You are going to gain understanding over time. So even it's just like your notebooks or your study books. Read a chapter today, drop that book. Come back tomorrow, read the same chapter. You see that you have fresh insights. You have fresh understanding. So it's the same thing with learning any skill. Okay. So that's by the way. Let's continue our class, please. Okay. So this is another candlestick pattern in the market. This is another candlestick pattern. So we call this wedge, the wedge pattern. It's just like a wedge, what you use to wedge objects like your car. So like I told you, most of these patterns are named after real life objects. Okay, they are named after real life objects. Wedge, let me write it. WEDGE, wedge, like you want to wedge something. So if you have seen most of these huge trucks, they used to carry wedge along. So and each time they park, they just drop it there. So this pattern looks like a wedge. So that's why we call it wedge pattern. Now, let me go back to our fundamentals. If you look at this, that's why I told you that a sound knowledge of technical analysis and fundamental analysis will make you successful. Okay, so you can see that. Let me change the color so that you will see this thing very well. Let me see, what color am I going to use? There are so many colors here, but let me stick to this one. Okay, so you can see that the market is moving in this format, like this. This is how the market is moving. Gradually it is fading. You need to observe something. If you are looking at a wedge or what we call a triangle pattern, if we have something that looks like an angle like this, so if the market here is wider but small, gradually the market will be fading into this area. Okay, if you see a breakout to the lower side, the market will drop. If you see a breakout to the higher side, the market will go higher. Okay, so the same thing with this wedge that you have seen, but this is an institutional candle. There's something I'm trying to make a point here. This candlestick is an institutional candle. Okay, this happened as a result of a fundamental news release in the market. That's why I told you that as a new trader, avoid trading when there is a big news event, because only the news can change the direction of the market. Now, if you are following by technical analysis, you will see that, oh, this is a channel. Okay, you will see that, okay, this is a channel. The market goes up, it goes down, it goes up, it goes down, it goes up, down. Okay, and these are your entry points. For if you want to buy, you enter here. Look at your entry points. All these are your entry points if you want to buy. Then if you want to sell, these are your entry points. You can see these are your entry points. Now, following by technical analysis, this is what the market is doing. But if you look at now, the market is fading gradually. Eventually there is a news release in the market. If you are looking at the market for you to sell again at this particular level, you see that there is a magnificent news that just hits the market, and then you can see that the market shoots upward like this. You can see that the market direction has totally changed. It has broken the role of technical analysis. This is where stop losses are very, very important. Should in case the market will not go in your direction again, or should in case there is a news release, it will hit your stop loss and automatically it will exit you out of the market to save your capital. Okay, so following by technical analysis, let me repeat again, the market should follow this pattern. But gradually the market was fading. Now, have it in mind that it is not just upward that the market can break through. The market can also break downwards like this. It can go down like this. This candlestick you are seeing here, this long bullish candlestick, can be a long bearish candlestick. Depends on the news event. It depends if the news is favorable to the currency pair or not. Okay, we use in like if you remember fundamentals very well, I told you we have the expected value and the current value. So we are using the current value to compare the expected value. if the current value is 0.5 and we are expecting the value to be 0.4, then the market now release a value of 0.6. So you can see that 0.6 is better than 0.5 and even better than 0.4 that we are expecting. So it is good for the economy. It shows improvement. Okay, so if the currency pair is the base currency, you can expect the market to go down. If it is the quote currency, you can expect the market to go up. So in this scenario, let's say this pair is a euro US dollar pair, and the news, let's say this is what's the name of this news? Okay, let's say this is NFP, that is non-farm payroll. This news affects mostly the US dollars, so it's coming directly from the United States of America. Okay, so once this news is released and is favorable for the economy, and this is a euro US dollar pair, you will see this strong bullish move in the market like this, just the way it happened. Okay, so because the euro USD, the USD is the base currency, sorry, is the quote currency. Okay, so if you are seeing a situation where the euro with, the USD is the base currency, the market will fall. Because if you are seeing a currency pair and you are buying that currency pair, you are automatically selling the base currency, and if you are selling the currency pair, you are automatically buying the quote currency. All right, so this is a wedge pattern. Okay, you have shown you the entry points already. So eventually there is always be a breakout. After breakout, the market will start falling again. Okay, you are seeing this move like this, like this, like this, like this, like this, and it broke. Finally, it may even reach this level again. If the market gets to this level, just know that it is going to be a strong level of support for the upcoming market. All right, so in the market, the chart patterns are not just random. We have the bearish and bullish patterns. Please have it in mind. So for this scenario, everything you are seeing here is a bearish pattern, meaning that a breakout of the lower side will push the market downward. Okay, so you are seeing what we call a rising wedge here. You can see this is a rising wedge for the first pattern. This is a rising wedge. Okay, I've explained the wedge already. So the market goes up like this, it moves in that channel. Eventually, if you look very well, you can see the breakout candlestick here. This particular candlestick is the breakout candle. So in this wedge pattern, let me draw like this. You can see that the market did what I explained earlier. It's moved like this, moved like this, moved like this. It broke, retest the level before it finally goes down. So what is here is the same thing here. I just drew it. So you can see that it is the same thing. After breakout, the market retests. The buyers entered, touched the level of support that now became resistance. Okay, it now became resistance, and then finally it dropped. Sometimes in some scenarios, if you are seeing the rising wedge, like it may just break direct like this and just break without any retest. Okay, without any retest. Okay, so we have a bearish flag, also known as an inverted flag. For the second one, we have what you call the bearish flag. Okay, you know what a flag is. Like I told you, these patterns are named after real life objects. You know, this is a flag. This is a flag, right? This is the pole. This body, this is the pole, and this is the flag. Okay, so this is the flag. Now we have two types of flag pattern. We have bullish flag and bearish flag. You know, once you hear bullish, just know that it is going up. So you see a situation where the market is moving like this, like this. It is going up, right? This is an uptrend. And then in this scenario, this is a downtrend. Okay, so let's say as the market is going up, as it is going up like this, like this, like this, you now see a slight move in the market like this. Okay, you see something like this, the market range within a particular period. So this is a bullish flag, meaning that if there is a breakout of the upper level, there may be a retracement, the market will go up. Sometimes it breaks out directly, just like the way I explained in the wedge pattern. You will, if you are seeing a bullish flag, so you are looking for a breakout of the upper, of this upper area here, not the lower level. Okay, to confirm the uptrend. So if you are seeing a bullish flag and you are seeing a breakout of the upper level, and then the market will continue to go up, so that is a bullish flag. So if the market is going down like this, and then this is a bearish flag. Okay, a bearish flag. A breakout below will tell you that the market will push down lower. So for this scenario, this is a bearish flag. You can see that the market came like this, like this, like they formed this flag pattern like this, and then eventually you are seeing a breakout, a direct breakout without retesting. So you can see in this scenario the market broke directly, there is no retest. So that is a bearish flag or an inverted flag. Okay, so here we are seeing a head and shoulder pattern. I've already explained this. Okay, I've already explained this head and shoulder pattern. This is the left shoulder, this is the right shoulder, and this is the head. Okay, and here this is the neckline. So a breakout like this will push the market lower. Okay, that's why we call it a head and shoulder pattern, and I've showed you different ways in which the head and shoulder pattern can appear in the market. Now we are seeing another pattern here called the descending triangle. All these patterns, if you start making yourself available in the market, you will begin to notice them. Naturally, you begin to see them. This one is called a descending triangle. When you say something is descending, we mean it is going down. Okay, it is a triangle, but it is descending. Let me draw proper. You can see that this is a triangle, but it is going down. Okay, you can see this is a descending triangle, so the market is moving like this, it is fading. So a breakout of the lower side will push it downwards. So this is what we call a descending triangle, because it is dropping low like this. Okay, so I know that some of this concept may sound very crazy right now, but with time it's going to start making a whole lot of sense to you. Okay, I don't know, maybe I will open a live chat, see if I can show you some of these patterns on real market, but for now let's continue. If there's still time for us, the last class was 120 minutes, and I want my classes to just be 60 minutes at most 1 hour. So but the other one was 120 minutes if I'm not mistaken. So you can see that was like 2 hours or so. Okay, so please, please don't sleep over this. Go and study. Just go to the Google, go to YouTube, type forex chart patterns. You will see them, they will appear. There are short videos out there on YouTube and short images on Google, just like this ones. So I'm just using them to explain, to illustrate to you how it works, that we show you all these patterns. Okay, so the patterns may not appear perfectly like this, but these are just how they can be represented. So you may not see a smooth descending triangle like this. You may not see a smooth ascending triangle or a bearish flag or a bullish flag. Okay, but you already have the knowledge, you already know the concepts, the basic concepts. So having known all of these things, you will now know how to incorporate them into your trading. Okay, all right. So the double top sometimes can also be referred to as a rectangle. Look at, because of the movement. Okay, you can see it moves in rectangular format. So this is the double top pattern. We can also call it rectangle, but just have it in mind that it is double top. That is a popular word there. Okay, so this is the first touch, this is the second touch, this is the resistance. Okay, what you should pay attention to is the movement of the market. You can see that this is a downtrend before the formation of this double top, and then finally it broke. Okay, so the previous trend matters a lot. You know that, okay, the overall trend is a downtrend, so this is a double top. If the market breaks below, we can continue to go with the sellers in the direction of the major trend. And then for this particular slide, we have the symmetrical triangle. So sometimes you may see a pattern like this in the market also. You see a pattern like this in the market, symmetrical triangle. So always, so this bearish, for the bearish pattern, please always pay attention to the sellers. Okay, if you are seeing a rising wedge, pay attention to the sellers. A double top, pay attention to the sellers. Descending triangle, pay attention to the sellers. That means the trend is what I'm talking about, the downtrend. Pay attention to the trend. So it is the trend that will help you to determine that if the market breaks out, especially at the lower side, it's an indication of continuous selling in the market. Okay, so we have another pattern called the cup and handle, or cup with handle, just like the shape of a cup. Okay, you can see this is the shape of the cup, this is the handle, you can see. Okay, so it is a bullish pattern. So a breakout of the cup and handle pattern, let me draw. This is the cup, and then the market moves like this. This is the handle. So a breakout like this, because the market must have been coming like this before it formed this particular cup. So this is a bullish candlestick pattern. So if you see a breakout, you can tell that, okay, the market will go up like this. Okay, so the opposite of it is called the inverted cup with handle pattern. Okay, so in this chart is like words and opposite. This chart is like words and opposite. Okay, What's an opposite? In the sense that it is always opposite of itself. The green candle and red candle, they are just opposite each other. The green candle is going up, the red candle is going down. You can spot a red green candle, you can spot a green candle like that. You can spot a red hammer candlestick, you can spot a green hammer candlestick in the chart. There is no difference. So the market is just turning itself upside down. So that is why sometimes if I carry the chart, you can reverse your phone. You will see that the market will show you a different pattern, the opposite. Okay, if you are seeing a double top pattern, if by the time you reverse it, it will now become an inverted double top pattern. Okay, just like the way we will see here. Let me zoom out. So this is a head and shoulder pattern. So you can see that this is a head and shoulder pattern. Okay, this is our neckline. So a breakout of this neckline like this telling you that the market will go down, right? Okay, but look at inverted head and shoulder pattern. If you can turn your phone upside down on a real market, you see that the head and shoulder pattern will now appear like this. You can see it is now in inverted format. What do you expect now? This is now your neckline. A breakout of this neckline, the market should go up, following by this pattern. So you can see the left shoulder, right shoulder, and the head. Okay. The same thing with double top. If you turn it upside down, it becomes double bottom. This is the double bottom, first touch and second touch. This is our neckline. A breakout like this shows the market will go up. The same thing if it is a triple bottom or a triple top. If you turn it upside down, it becomes a triple bottom. Okay. So you can see how this market interchanges. We have talked about this symmetrical triangle already. Okay, this is a symmetrical triangle. A breakout to the lower side, the market will fall. Okay, a breakout here, look at the breakout area, the market falls. You can see. So this is a symmetrical triangle. It is moving like this. You can see. Gradually it is fading like that, until eventually, see a breakout. So this is technical analysis, please. Okay, you can see this is a triple bottom, top rather. If you turn it upside down, it becomes a triple bottom. So this is a triple top. You can see this is the top. This is the first, second, and third. Okay, and this is the neckline. So a breakout of this neckline, market should go down. Once the market broke this neckline like this, it's going down. So most times, a strong breakout will push the market to the downside. This is a rectangle, or what we popularly call the double top. Like I told you, you can call it a rectangle because of the appearance. Okay, so this is a rectangle or a double top. You can spot the double top. You can spot the neckline. And you can see the breakouts. Okay, and you can see the market falls. So this is a falling wedge. You know, we have rising wedge, we have falling wedge. Okay, so they are just opposite themselves. If the rising wedge, the market should be the wedge is going to show in the upside like this. Let me draw proper. So if this is a falling wedge like this, so the rising wedge should be like this. Okay, just like the way we saw in previous example. So in this falling wedge, you can see that the market is fading. You can see gradually it is fading, gradually, finally it broke. Sometimes it may even move like this before finally or it will go down. Okay, so this is a falling wedge. If it is an uptrend, very, very good. A breakout to the upside. Okay, the market will push it upward. So if you are in a chart and you want to enter a trade, the next level of resistance is this area here. This is our next area of resistance, right? And then you now see this breakout candlestick. So you can wait for the market to, as it's moving like this, it goes up, goes down. Sometimes if it goes, let's say after this breakout, if it retests, you can open your position around here and then take your target to this particular area here, so be your take profit. So this is also a rising wedge. This is a descending triangle, we've talked about it. Then this is a triangle. You know, we have a descending triangle, we have ascending triangle, and we have the triangle itself. Just like the name implies, triangle. You can see, this is a triangle. Wide area, you can see that the market eventually will be fading, fading, fading. Then it can break up, it can also break downward like this. So either ways it goes, it broke, we can go with the market. Okay, we can go with the market. So we've already talked about the ascending triangle already. So you can see how it functions. So this is what we call a rounded top pattern. A rounded top pattern, where there is a particular indicator you can use to check this. I'll also talk about trading indicators soon. Okay, so because of it is round, that's why we call it rounded top. So this is the neckline. A breakout of this neckline, market should drop. Okay, market should fall. So you can see this is a head and shoulder pattern. You can see, you can spot the left shoulder, you can spot the right shoulder here, you can spot the head, and you can see this is the neckline. Okay, you can see the breakout candlestick, it goes up to retest that level of previous support, which is now resistance, and then falls down. Sometimes it falls directly without retest. Okay, that's why if you are opening your trade, you need to give enough room for it, should in case there is no retest, because you cannot predict when the market will retest or not. Sometimes retest will come, depends on the market situation. Maybe if there is a level here, you can see in this area there is a level there, so the market is retesting that level and then before it goes down, to show you that the level is an active and strong level. So this is a symmetrical bottom break triangle breakout. So all these patterns and shapes, you are going to master them. So if you open your chart, you can see the, what is it called, you can check the trend. Okay, if it's going up or if it is going down, you can check the trend. Then from there you can determine the pattern the market will, if you see the pattern there, you can determine the direction the market will take. Okay, this is also a double top pattern. So all these patterns, please just go to the market and spot them. I say the market, research about it, just make your further findings. Okay, in our next class we are going to talk about the I'm going to show you on a live chart. So as I'm showing you these patterns on the live chart, in fact that one is not even the next class, that one is just to show you, because this class is already past time already. So this is other 1 hour and 4 minutes already. So I'll just open the chart and show you. Then from there I'll just talk about the trading indicators. Okay, those indicators, as the name implies, they are showing you the direction of the market, but they are all not working, and I will show you and I will prove it to you. Okay. All right, so try to sign up with the brokerage, get your accounts verified. Okay, so we can hit the market proper for live and practical classes. Okay. All right, so if there's any question you have, please go and make your findings, go and make your readings, go and make your research. The learning continues. It's not a one-day thing. If you have listened to what I said earlier, you will realize that I've come a long way. So you also will come a long way in this line of duty, or in this line of business. Okay. You can ask your questions, drop your questions, ask your questions. All right, where you don't understand, please. So with that note, I will like to call it a day for this particular session, please. Okay, I'm already dozing off, feeling sleepy. All right.